markets hate uncertainty. Investors hate uncertainty. And one of the things that's most certain is that President Trump will bash China every day until the election. And so I think most of the US-China back and forth and verbiage is already discounted in the price. And I suggest if you look at the renminbi or the Chinese yuan or the Chinese stock market, you'll see that those have been some of the strongest financial assets in the world in terms of their returns year to date and over the last 12 months. So I think this is something that gets a lot of headlines, this back and forth between the US and China. But from an investment perspective, I think it's very overstated as a risk. At the current levels, where you have a number of things to think about, talking about the US equity market, you have the question of whether there's going to be another stimulus package or not. Then there's the election, as you point out. And then around and behind all those two things is the question of a vaccine or a much more rapid testing process that will serve as a bridge between where we are now and a vaccine. All those things, I think, are going to transpire in the next 3 to 6 months. And so, in a way, as hard as it may be to believe, in a way, the easy money has already been made in the stock market recovery. Going forward from here, you have to kind of have a view of whether or not there's going to be that stimulus package, whether or not the election will be close, will be accepted by the president, and then, of course, the issue of the vaccine. And so the way we've been thinking about it, we have what we call a COVID investing formula. And that COVID formula is first, you have to get the virus under control. Once the virus is under control, you can reopen your economy. Once you reopen your economy, you can start to stimulate and drive domestic demand. Domestic demand is very important because one of the things we've seen is that global trade is down 15 to 20% year over year. So domestic demand becomes obviously that much more important. Once you have domestic demand recovering, the stock market can kind of switch from its focus on technology to what we call the rotation trade into cyclical and value sectors like materials, industrials, financials, etc. And that allows you to take stock markets to new highs. So I think for the US to have much higher room to go up than where it is today, we need to have a rotation trade in the United States. Tech will not do it by itself. The problem for the United States, obviously, is that it didn't handle the virus well. The reopening has not been smooth. Domestic demand, therefore, is not behaving as well as you would like. That means the stimulus package is more important. That means more political risk, and that means a weaker currency. So the U.S. equity market hasn't really felt the lack of success in the COVID formula because it's had technology. And tech is clearly a winner in the age of working from home and remote and all this other stuff. But I still believe that technology by itself is not going to be able to drive the U.S. market or other markets higher, materially higher than where it is today. Markets need to broaden out. Right? This is an opportunity for other markets to demonstrate leadership. And we've already seen that with China. China's equity market is the best performing of the big stock markets in the world year to date and over the last 1 year. Europe has done reasonably well over the last 3 months. It's handled the virus better. Its reopening has been better. The domestic demand pickup has been reasonably good. So I think there's an opportunity if stimulus doesn't come through in the United States, and I still think it will. I believe in September we will get some sort of a deal because I think for the Republicans and for President Trump, the failure to come to some sort of an agreement on a stimulus package 2 to 3 months before an election I think just doesn't make any sense. So it's really a question of who's going to give up what to come to a compromise. And so I do expect the stimulus package to happen. If it doesn't, you're absolutely right. I think U.S. equities will sell off. They'll probably underperform the rest of the world because of the rest of the world, as I said, doesn't have that problem, doesn't need the stimulus as much as the U.S. does because they did a better job in Asia and in Europe dealing with the virus and therefore have a better reopening and a better chance to stimulate their domestic demand profiles.